In 2025, the stock market is no longer just a battleground for human traders, analysts, and hedge fund managers. Today, it's a complex digital ecosystem where artificial intelligence, AI, plays a central role in analyzing, predicting, and even executing financial trades. But what does that really mean? Can machines predict stock movements better than seasoned investors? Can AI tools actually beat Wall Street? In this video, we explore everything you need to know about AI prediction in financial markets, the technology, the tools, the strategies, the risks, and the real-world examples of how AI is changing the way money moves. Let's begin. To understand AI in trading, we need to look at how prediction works. Traditional investment strategies rely heavily on human interpretation, looking at charts, financial statements, economic news, market cycles. But AI models take this to an entirely new level. They analyze massive datasets in milliseconds. They find hidden patterns that no human can detect. And they learn, continuously, from every tick in the market. The most common AI methods used in financial predictions today include machine learning, algorithms trained on historical stock data to predict future price movements; natural language processing, or NLP, used to read and interpret news headlines, tweets, and company reports to detect market sentiment; deep learning, using complex neural networks like LSTM, GRU, or transformers to forecast trends based on multidimensional input. Let me give you a real example. One of the most powerful tools in AI finance is a neural network called LSTM, long short-term memory. LSTM models have been trained on years of stock prices, earnings data, and news cycles. In experiments, they have shown the ability to forecast short-term price direction with over 70% accuracy, depending on the stock and the time frame. But that's just the beginning. Enter FinBERT, an NLP model built specifically to understand financial language. FinBERT can scan through thousands of earnings reports and market news articles, and assign a sentiment score, positive, neutral, or negative, to each one. It's been shown to accurately detect how markets are likely to react to a specific event, even before that event fully unfolds. And then we have GPT-4. Large language models like GPT are being used to create financial dashboards, generate trading signals from news sentiment, and even write investment strategies on the fly. You can now ask a GPT plugin, "Summarize today's Fed minutes and tell me how markets are likely to react," and it will do that in seconds, referencing both history and real-time data. This brings us to the next key question: what AI tools are available for individual investors? You don't need to be Citadel or Goldman Sachs to use AI. In fact, right now, thousands of retail investors are using platforms that give them access to the same predictive technologies. Let's break some of them down. 1. Trade Ideas AI. Trade Ideas is a powerful scanner that uses machine learning to identify trade setups in real time. Its AI engine, Holly, scans the entire market pre-open, tests thousands of simulated strategies, and then selects a handful of high-probability trades for the day. It literally tells you, this setup has an 82% historical win rate over the past 6 months, and many traders swear by it. 1. Kavout. Kavout uses AI to generate something called the chi-score, a ranking of stocks based on predictive modeling, technical signals, and fundamental analysis. It's like a credit score for stocks, generated by machine learning. Want to know if Apple or Nvidia is undervalued based on 1,000,000 data points? Kavout will show you that in a single dashboard. 1. Tickeron. Tickeron offers AI-generated predictions on stock direction, breakout patterns, even crypto. You can see a chart pattern and the AI will say, there is a 68% chance this triangle pattern breaks to the upside within 5 days. It even gives you backtests, showing how similar patterns performed historically. 1. Numerai. Perhaps the most fascinating project of them all is Numerai, a hedge fund powered by data scientists across the globe. Thousands of quants upload their prediction models every week. Numerai blends them into a single, meta model, that makes live trades in U.S. equities. You don't even know what the stocks are, the data is encrypted, but if your model performs well, you get paid. It's AI meets crypto meets crowd intelligence, and it works. Now, let's talk results. Can AI actually outperform human investors? Yes, and no. In some cases, AI strategies have beaten benchmarks like the S&P 500. For example, an AI-driven ETF called AIEQ launched in 2017 uses IBM Watson to select stocks. It has outperformed the S&P in certain years, though with higher volatility. In other cases, AI models do great in backtests, but fail in real markets due to overfitting. One study by MIT showed that 63% of backtested models lost money in real trading. Why? Because markets change. And that brings us to the next point: risks. There are major risks to relying solely on AI. First, AI models are only as good as the data they're trained on. Garbage in, garbage out. If your dataset is biased, your model will be biased. Second, overfitting. This happens when a model becomes too good at predicting the past, but performs terribly on new, unseen data. Third, black box behavior. Many deep learning models cannot explain their decisions. They just say, buy this, or sell that, without telling you why. This is a big issue in regulated environments. And finally, herd behavior. The Bank of England recently warned that as more traders use the same AI tools, it could lead to everyone making the same trades at the same time. That means a sudden crash, or spike, could be amplified beyond control. So, what's the solution? The best strategy is not human versus machine. It's human plus machine. AI can process data, identify patterns, and generate signals. But humans provide intuition, market experience, and judgment. The future of investing isn't replacing humans. It's empowering them. And that's what makes AI so powerful. It's not about removing the investor. It's about upgrading the investor. So if you're watching this and thinking, I don't know Python or machine learning, how can I use AI? Don't worry. You don't need to be a data scientist. Start with platforms like ChatGPT, Trade Ideas, or Tickeron. Use tools like FinChat.io or AlphaSense to summarize financial documents. Use AI to screen stocks faster. Analyze market sentiment in seconds. Build smarter watch lists. And manage your risk more effectively. This is not the future of finance. It's the present. Are you ready to use it? Because the edge is no longer who you know, or even what you know. It's how well your tools help you move before the market does. If you found this video helpful, don't forget to like, comment, and subscribe to AI Finance Mastermind. Every week we publish deep dive content on the intersection of AI, markets, business, and finance, helping you build smarter strategies and stay ahead of the curve. Until next time, trade smart, and use AI wisely. Disclaimer: this content is for informational and educational purposes only. It does not constitute financial advice. Investing involves risk, and past performance is not indicative of future results. Please consult a licensed financial advisor before making any investment decisions.